This is an updated technical analysis on Bitcoin cryptocurrency here off the daily interval. And I had mentioned in my previous video that long traders and or dip buyers need to step in at this key crucial pivot point right at that 453.80 price support, coinciding with the primary downtrend line and 50-day moving average support. And to the button, to the T is exactly, we'll zoom in here, where they got bid up, and that was good for a 17.7% in gains. And here we are. There's some interesting, significant developments where we've effectively put in a pretty stunning looking downside gap 3 method bearish continuation pattern. I like to say in my previous videos, they usually act as a weighted resistance, only increasing the odds for more downside to come. And again, here what's more significant is we've effectively now put in negative RSI divergence. Here on the daily interval, we had no divergence. We had no divergences previously, and we sure as hell do now. I would only expect a great risk reward ratio where you could set your stop loss up, a little bit stop above that previous high for a 6% stop loss versus that first target for a 10.8% crash, down to the primary downtrend line there for a 13% crash, coinciding with the 50-day moving average, down to 19,611 for an 18% crash, and ultimately down to the bottom of that key trading range for an 18,332.50 price support for a 24% crash. We'll see what happens. That's in a renewed objective short trade entry, if not an add-on to your existing position. We'll zoom in here to the 240-minute interval, and these divergences have only been baking and growing larger here now. These are some new key levels that I've added. Updated levels. I'll show you some risk reward here. We're at least down to that 23.13 for a 1.2% crash, down to 22.734 4.5% crash, down to 22.440 for 5.6% crash, down to 21.453 for 9.9% crash, down to 26.99 for a 13% crash. And then obviously down to that key level 18,332 for close to 24% crash. But this is a zoom in structure of the 240-minute interval, and these divergences, as powerful as this rally has been, as powerful as this bear market bull rally has been, these negative and or bearish divergences have only grown and constructed larger on all three indicators, only increasing the odds of a much larger crash.